Let's break down inflation. Very simply put, it means you're getting less for your money. The White House loves to throw out this term, peak inflation. It's true, gasoline prices are coming down. But have we reached peak inflation? The data might suggest otherwise. On the heels of retreating gas prices, some economists are saying that the worst of inflation is behind us. After digesting the latest numbers, Preston Caldwell, chief U.S. economist at Morningstar, said, "The June report will almost certainly mark the peak in inflation, as food and energy prices are set to fall sharply in the next month's report." President Biden even suggested that we could see better inflation numbers going forward. Referring to the June CPI numbers, he said, "The headline inflation reading is unacceptably high. It is also out of date." Economists like to look at what's called core inflation, what they believe is a more revealing look at real inflation. Core inflation does not include volatile food and energy prices, which can be impacted by factors unrelated to monetary policy and the underlying economy. Food and energy inflation is real inflation, but for the sake of discussion, let's consider only core CPI. Does current core CPI suggest that we've reached peak inflation? Not really. On a year-over-year basis, core CPI in June did fall ever so slightly compared to May. May's core CPI was an even 6%. The figure for June came in at 5.9%. But that's just not enough of a drop to consider that we have reached peak inflation. Ben White, chief economic correspondent at Politico Pro, said, "Wall Street expected a bigger dip to 5.7% to confirm the idea that the worst was over. It does not appear to be." As a matter of fact, core inflation rose by 0.7% in June on a month-to-month basis. That's more than the 0.6% increase we saw in May. It also is greater than the 0.5% increase that had been projected by Bloomberg economists. There's something else. Upward price pressures are now being felt in general products in CPI other than food and energy. Robert Frick, corporate economist at Navy Federal Credit Union, noted that CPI spike is led by energy and food prices, which are largely global problems. Prices continue to mount for domestic goods and services, from shelter to autos to apparel. Of particular interest is the cost of shelter, which makes up about a third of CPI. The year-over-year shelter index climbed 5.6% in June. We've not seen that big of an increase in shelter inflation since February 1991. Whenever we do hit peak inflation, does that mean that inflation will instantly turn around and get back down to 2%, the inflation rate we saw for decades? Not likely. In a recent survey of fixed income managers, fewer than 5% expect to see headline CPI drop below 2% anytime in the next 5 years. And respected Johns Hopkins economist Steve Hanke recently said that the nation's bloated money supply means inflation could remain as high as 7% through the end of 2023. In other words, even if we do reach peak inflation, Americans should plan on and plan for higher inflation for the foreseeable future. Whatever happens, we'll keep you up to date. That's why I suggest you take this opportunity to learn more about what's going on in the economy by attending our one-on-one educational web conference at augustapreciousmetals.com/webconference.
Hey guys, Joe Montana here with my man Devlin Steele. He and his team at Augusta Precious Metals are constantly putting out new information to keep you ahead of the game. Click subscribe now and hit the notification bell to stay up to date. You'll be glad you did.